this is a good capital, even though it's small, but it's only going to, what you've got to understand is this, yeah, that do not be in a hurry to double your account or quadruple your account, triple your account. Do not be in a hurry to grow this account too fast, because when you do that, you're going to put yourself in that box of over trading, and you're going to start looking for too many trades because you want to be able to flip it as fast as you can. And in doing so, you're going to lose a lot, right? Take trades that are quite unnecessary. Then you lose a lot. So you got to understand the fact that when you're trading a capital like this, you have to put yourself in a situation where you're not trading too much. You're not taking too many daily trades, and you're not even taking too many weekly trades as well. You're trading less. That's what you should be doing, so that you can have, you can always have that backup of 1%, so you can still get back into the market with. So what I'd say is you want to start off with 2 trades per trading day. Alright, understand that it is just 1% risk per trade, which would amount to $1. Alright, now understanding this, okay, yeah, quality over quantity. Now, if this now becomes the case, because 1% of your account is now $1, right? So it means that you only want to lose $1. Now, what is $1 per pip? So a pip count. Now, that's the thing to now look at. So if we're talking about $1, then it means that if I'm taking a 0.01 lot size trade, right, I would only have a stop of 10 pips for me to lose $1. Am I correct? Yeah, I said. So if in a case where, again, your trading model, your trading system allows you not risk that much of a pip on a trade, so you're in luck, right? In that case, now you get to risk 5 to say 8 pips, depending. Okay, and that will still put you at a 0.01 regardless, because then you can do a 0.02 because of spreads and because of incentives, which is that giving price room. So you always want to keep it at the 0.01, because the 0.02 would be quite too high above your trade plan. So just keeping it at the minimal. I think cases where you have like within a 3 pip, a 2 to 3 pip, that's when you can now use a 0.02. So it's only in special cases should you use that, but you only trade in the 0.01 based on the fact that you only risking 1%. And so this is the reason, this is actually the main reason why growing this capital is going to take you time, right? So if you get 20%, if you get a trade, say on the day, you get a trade of 1 to 20 or even a 1 to 10%, then that's $10. You get a trade of 1 to 20, then that's $20. You get a trade of 1 to 30, then that's $30. So it all depends on, like, think about it in this perspective. Like, if I can I consistently make a 1 to 10 just to reward? Alright, like ask yourself that question. Can you consistently make a 1 to 10? So it means that if you're risking a 1 to 10, you're always looking forward to catch, say, 100 pips, 80 pips. And that's quality trade. For you to be able to catch 180, it means you're taking a quality trade, right? And I think trading $100 account is actually very good when it comes to discipline, because you're going to learn a lot when it comes to discipline, because you know that you are trading a small capital. And if you're not disciplined, you're going to have problems, trust me. If you don't stick to it and tend to be greedy and do 0.02 and overtrade and do crazy stuff, you're going to start making reasons why you might end up blowing your account. Alright, but if you stick to it you would eventually be able to even multiply it to $1,000 if you want to, as long as you stick to the fact that you just have to be disciplined. All right. So if you can consistently make a 1 to 10, which I think with this trading model and with patience, it's all just understanding that you don't have to trade every day, right? Like every single day is not a must that you must trade, even as a day trader. Like there are days when you don't have to trade and it's all good, it's all fine, right? Even especially when the week is just starting, like do not put yourself on too much pressure when the week just begun and feeling like, oh, I didn't catch a trade on Monday, oh, I didn't catch a trade on Tuesday, and so therefore my week is not going to go well. You don't understand what's going to happen tomorrow. You don't understand. You never know what's going to happen on Thursday. You have no idea what's going to happen on Friday, right? Because there are days when I even make more than I anticipated, right? There are days when you can even make a 1 to 100, right? Anything can happen in the market. We all know that. Right? The crazy days, anything can happen. Brexit could come up. Someone could tweet something crazy. COVID news could come up. Anything could happen. Right? And it could skyrocket the market, even in your favor. Okay, so it's all about just understanding that when you miss trades or when you don't take trades, even when you look at the charts and you see trades that you should have taken, that makes sense. It doesn't make you a bad trader. It doesn't make you not know what you're doing. It's just for you to understand that every day is not a trading day, right? Even as a day trader. And there's this battle that's going to go on with your psychology as well, which is day trading and swing trading, right? And it's the psychology behind understanding when to hold the trade for a swing trade and when to actually day trade and close profits, right? Not holding it because you feel like it's going to continue in your favor and then get greedy. So there's going to be that battle as well. So it's just about understanding how to consistently make a certain risk to reward. That's your plan. All right. Have a plan. What's your target? And when you don't have a target, that's when you find yourself price taking you out of your swing trade or supposed swing trade that you wanted to swing, and the price takes you out. And maybe you will end up going in a direction again and then you miss that entire move and you're feeling bad about it. Is understanding that you need to have a target, a set target for yourself. Now, if you're in a trade, and this is how to balance the cycle between swing trading and day trading. Now, you've got to have a target for your day trade. Okay? That's the thing. Swing trades, we all know where the price is going to get to. Maybe we have our TPs on the daily time frame or the weekly time frame. But day trade, what's your target plan for that day? What's your risk to reward target plan for that day? If it's the trade you want to hold for 2 days, what's the risk to reward plan for that day, for those days, right? And when you hit your target, cash out profits, right? That's how to stay in the game. That's how to be profitable. And like feeling like just because you got in, you can now swing trade it and then it doesn't work out in your favor. All right. So, that's how you can balance the psychology behind swing trading and day trading. Okay. So moving back to this question someone asked me, it is all about understanding how consistent can you be by making a 1 to 10. Maybe even in 2 days, maybe even in a day. It all depends on your skill set. Right. But I think 1 to 10 is one thing that I believe everyone here should be able to take at least. I don't want to go down because that would be thinking small. So instead, I just want to think big, and I think 1 to 10 is realistic. I think 1 to 10 makes a lot of sense. All right. So that's what I'm sticking to it. And if you can consistently make 1 to 10 in the day, then understand that it's only going to take you 10 days to make a 1 to 100. Right, and you end up flipping your account within 2 weeks. But 10 days in a win, right? That's the concept. Now, it could take you a month to flip your $100 account to $200 account, right? But understanding that if you can consistently make a 1 to 10, heck, it can even be in one trade, right? It could even be in 2 trades. A trade could be 1 to 30, 1 to 40. Anything can happen, right? But putting yourself and giving yourself time, say, okay, so this month, let's say last month, for example, let's take November for example. You told yourself, okay, so in the month of November, I'm going to try to grow my account, maybe even a 1 to 50, all right, for the month, maybe 50% for the month, and just play along with it and see how far you can go, right? And at the same time, don't forget, I said 2 trades per day. You want to be able to trade less so that it's discipline. It's going to make you disciplined to not take too many trades. So you're only risking 2% per day at the end of the day, which is also less than the 3% maximum daily loss, which you should be taking, because when you lose 3% in the day, it puts you in the bubble of pain. And to get out of that pain, always trade. You got to trade less rather than trade more, so that you reduce that pain, or reduce the fact you have pain. You want to, am I the only one who feels pain? I believe everyone feels pain when they go into a bubble of loss, confusion, anxiety, curiosity, right? All those things come up. We're all humans and we do have emotions, so I'm not a robot, right? So definitely I'm going to react to certain things, especially the fact that this is money and this is all mindset, this is all psychology. So yes, it's always going to affect you. But for you to be able to reduce it, because that's what management is. The word management is being able to manage stuff, because it's always going to happen. But how well can you manage pain? Or how well can you manage loss? Okay, I think being able to manage loss is really, really very essential. Okay, so trading less helps you manage loss as well. So that's how you want to keep it, all right? You want to keep it simple, straightforward, understand your plan, have your plan, and stick to your plan. The moment you start going away from your plan, you're going to start doing something crazy and you're going to develop bad habits and you won't be disciplined. Okay. So this is one way I think will help you out. I hope it makes sense. The person asked me that question. And that's it. So I just wanted to throw more light on it. And this is also applicable to any capital as well. It's the same thing. It's only going to be more money. So that's the only difference. But it's the same thing. The same